that, our closing fireside chat is going to be moderated by Guy Adami of CNBC Fast Money, and our speaker is Afsaneh Beschloss. Afsaneh is the founder and CEO of Rock Creek, a leading global investment firm. Previously, she was managing director and partner at the Carlyle Group. And before that, treasurer and chief investment officer of the World Bank, and was also at Shell International and JP Morgan. She has advised governments, central banks, and regulatory agencies on global policy issues, financial issues. And I guess ESG has become much more popular in the last 10 years, but Afsaneh has been working at this for a very long time. She led the World Bank's energy investments and policy work on sustainable investing in climate-related renewable energy, power, and infrastructure projects. Afsaneh has been recognized as one of the most powerful women in finance, and we are truly delighted. She is a member of our board of directors at Georgetown University. With that, Guy, please take it away.
Professor, thanks so much. Obviously, Georgetown has tens of thousands of graduates that they could ask to moderate a panel like this or a fireside chat like this. I'm honored you chose me. It obviously is always great to be back in the Georgetown community. And that's an incredible introduction. Afsaneh, before we get to it, I have to ask you this question. You know, the desert island thing. If I'm on a desert island, I'm telling you, my record is Zeppelin 4. I don't know about you, but that's not what I'm asking you. What I am asking you, though, is which one of your husband's books are you bringing with you? You can only choose one.
So you've put me in a really difficult situation, Guy. And whatever I say, I'm going to get in trouble with my husband. So let me turn it around and tell you, I've known Michael since he wrote his second book. I've loved every single one of them and learned a lot. But I'm actually looking forward to his next book, which is on presidents and race. So that's the one that I'm sure I will not be taking to the beach, but I certainly will be taking along.
That's a brilliant answer. See, that's why, as most people are smarter than I am, that proves once again that there you go. Well done by you. Listen, you have so many interests. We heard your bio, just a variety of different things that you're interested in. But my sense is there's a common thread. Can you speak to that?
So, Guy, I'm an economist by training, and very early on, while I was training as an economist, one of my professors took me aside and said, why don't you learn about clean energy also while you're at it? And he ran the Oxford Energy Institute. So that's how I got my start in looking at cleaner fuels. And fast forward, as Rena was kind to mention, at the World Bank, it was part of our DNA, this term ESG, and the previous panelists, people like Ann Simpson and others who are leaders on the topic alluded to this. ESG was sort of a term that was used. It was the moment you said it, it put a lot of people to sleep. But at the World Bank, we did early on try to measure the impact of investments on climate. How did your investments do with regard to improving education systems, health systems, and so on and so forth? So it was something I learned to do. The second thing that I was always part of since I was in school, growing up in another country, I went to the international school. I was around a very diverse group of people, and that continued. And so the two themes, if you look across my life and my work, have included what is now called diversity in the workplace and investing in sustainable ways. And I think I was just very fortunate early on to have those great influences. And that's what at Rock Creek today, we are investing in climate, in health, education, affordable housing, and job creation, at the same time as we've invested more than $7.4 billion in firms that are diverse.
It's amazing. You do that extraordinarily well. And so it's interesting when I see candidates for jobs or candidates for schools, and I see they're in 10, 11, 12 different clubs. The first thing I say to myself is, if you're in so many clubs, how do you manage to do them all well? And, how can you focus on each one of those? I bring that to you because you're involved in so many different things, but you do them all extraordinarily well. How do you do that? How do you find the time? What's that discipline like?
So, Guy, I think really good point, probably not doing anything too well, but One thing that is really important in terms of both my day job, my nonprofit work, and my family life is they're all interconnected in a way. And the thread is, what we were talking about just in the previous panel, this whole thing that may again sound corny about doing well by doing good. Mm-hmm. And if you look across the, let's say, nonprofit boards that I'm involved in, whether they're involved in education or in finance or in, they all have a very, very common themes. And what I find is what you learn in one place and what you contribute can be leveraged. And that really is the name of the game, because one thing I learned at the World Bank is the word leverage. And I don't mean by that derivative leverage only, which can get you into trouble, but knowledge leverage. The more you learn and the more you share, the better. And that was one of the things that I learned mostly at the World Bank, which is how do you learn, let's say, about solar, how it works and all the issues in one country, and how can you take that experience to other countries, good and bad. And I think that really has been sort of what has been very much part of my work and career. And that's maybe why you see that I'm involved in a number of nonprofits.
Well, what's great is you're not siloed, right? I mean, you're in all these different verticals, but you've allowed them to sort of, flow into the other one. And that leverage word, which we've chosen to make it a 4-letter word in the media and stuff, it's not. In this case, it's an extraordinary thing. It's really important. And obviously, listen, your career speaks for itself, but we play stock market to a certain extent every night at 5 o'clock on the East Coast, but I'm not looking to do that here. What I am looking to do, though, is get your views sort of on what's going on in the global markets, the economies. There's so many cross currents that I find fascinating right now. I'm curious to what your thoughts are.
So I'm probably in the more, generally speaking, optimistic group right now. Obviously, COVID put us in a very bad place. And when it hit us in March of 2019, I think all of us didn't know whether we would be around physically and otherwise. We didn't know if our businesses, our families would be around. So there was a huge shock to the system. And it has impacted all of us. We're sort of today in a place where unemployment is in a much better place, but the number of unemployed is more than pre-COVID, right? The number of people still looking for jobs is larger than pre-COVID, but we also have very unusual things going on in the economy. Number one, a lot of people quitting their jobs and looking for better jobs. You have better opportunities coming up, and wages starting to go up. What I'm concerned about, Guy, is we talk about inflation. Obviously, that is the big elephant in the room. And there's no way to talk about what's going to happen without mentioning inflation. And I'm very fortunate. Alan Greenspan, who's close to 95, sits here in our offices at Rock Creek. And I had lunch with him last week. And he did bring up that term that you may remember from years ago that he used, the conundrum word. And I think it is very applicable to where we are today. There is a conundrum, and what happens will very much depend on what people's expectation of what the Fed will do. Will the Fed jump ahead or behind? But let's remember that this situation we're in is very different than before, right? The amount of money that has been thrown into the economy is much bigger. At the same time as the rate of technological change and startups is like never happened in history, right? And so we're trying to apply history to the future. And I think that may be a little bit more difficult. So number one, inflation, I think, will be more of a short to medium term. I think once the supply chains are removed, we will be in a very different place. And so I'm less concerned, but in the short term, obviously, we all are concerned, and all kinds of things could happen in the markets. I'm excited about Europe, as obviously the COVID numbers are worse, as you and I are speaking today, but broadly speaking, with their social policies, with their economic policies, and they're behind us in the US, I think there is a lot of potential there. I am concerned about China, one, because Chinese, what people don't talk about is Chinese growth rates were 7%, 8%, 10%, but they're not going to be like that anymore. They're going to be 4%, 5%, or something like that. And therefore, you're moving to a different growth rate at the same time as the government is cracking down on the business sector in a way that they did not know before.
What's interesting is the role of central banks, which I find fascinating. 30, 40 years ago, people couldn't pick Paul Volcker out of a lineup. And now people can name not only Jerome Powell, but all the other central bankers around the country. It's fascinating to me, at least. What is the role of central bankers as you see it? I think they've sort of overstepped their boundaries. I'm curious to what your thoughts are.
So in Economics 101, the central bank is responsible for making sure that the economy is functioning, and the two tools they are controlling are interest rates and unemployment/employment, right? And I think one of the things that Jerome Powell realized he had to think about a lot more this time around was jobs and equity in jobs. And that word, sort of equity, it was not something that was very much part of previous Fed chairs' language, maybe Janet Yellen a little bit, but really not part of the language. And I think that may be, I don't think that part is overstepping, no question about that to me anyways. But the fact that we do need to create jobs for everyone, and not just wages in the finance sector going up, but wages across whatever your job is, blue collar, white collar, across the board should be higher, whether you're, especially, why do people not want to be teachers, or what do people are moving out of, nursing and all the jobs that we need, because they don't feel their compensation is sufficient to take the risks they're taking every day. And so, wages going up, we are concerned about inflation, but that also makes people have a living, and that turns around more growth in the economy. I think that's where the Fed is going. I think that's a little different than Feds in the past, where it was a very mechanical inflation and employment job creation. The rest, obviously, I think, as you said, we could think they're maybe moving a little further beyond that on their terms of reference.
One of the things that I have a problem with, and I talk about it, I've written about it, I've done talks about it, is this wealth gap in this country. I can't speak to the statistics, but I would submit that the wealth gap, the divide in this country has never been wider. And oh, by the way, it continues to get wider by each passing day. There are a number of different reasons for that. But what are your thoughts on that? And how can we sort of stop that and get it going the right way? Because, we're just headed in the wrong direction. I would submit, I'm curious your thoughts. For some people in this country, things have never been better. And it's remarkable when you think about the backdrop of what's happened over the last 18 months. And I would think 12 to 15% of our fellow citizens, we're talking about late 1920s, early 1930s stuff. And that's not hyperbole. Can you speak to that?
I think I listen to you a lot, and I think I am completely with you on that. Huge concern on the lack of equity. And, as I said, I studied economics, and a lot of students at Georgetown are studying finance and economics. And I think what was a phenomenon in developing countries, in emerging countries, which was this huge lack of equity between the very rich and the very poor, and in between, the middle classes, is something that has now become a phenomenon in the US and other parts of the developed world. It is a huge concern because it's not good for social stability, political stability, or economic stability. And I think the two crises of 2008 and 2020, 1920, 21 now, definitely made this worse. And unfortunately, the Fed policies were not intended to, but by pushing capital the way that they did, working with the largest firms to get it fastest out without looking at how to get it out to people who needed it most, meant that some people got help who didn't need help. A huge number of people benefited from the unbelievable liquidity in the markets. And as you very correctly said, 15, 20% of the population was left in 1920. And I think there is a lot to be done now by the government, by the private sector, to make sure wages are at the right level, and the people's health is sufficiently taken care of, and education, so that they can move from the 1920s into the next to the 2030 instead. Maybe make that leap. And that's what we did as part of economic development. That is, some of those lessons that we learned in emerging markets should be now applied to the developed world.
And I hope we can apply them, because, I think we're at a critical level right now, and I hope we can stem that tide. It remains to be seen, because it's gonna take some political will, quite frankly, to do it. And I've seen no indications that there's anybody willing to do that. With that said, there's been this debate of a phrase that's now become somewhat de rigueur, as they say, stakeholder capitalism. Where do you come down on this?
So I think it has become, the Business Roundtable started using that term. So it's very simple. It used to be that wages were, when you looked at the pie chart of total economy, wages were important, capital was important, technology was important, and of course there was no value on what the last, we've been talking about the last 2 days, which is sort of looking at the value of air, water, and all the other good ESG types of sustainable commodities. Now, what has happened is that share of wages has got much smaller, right? Especially just general wages. And the share of capital has gone up. That has to get fixed. And unfortunately, people who are holding onto the financial part of the pie are not giving up, right? And it's almost like, we don't need a revolution, but we do need more equity and almost reasonableness, whether it is through taxes, whether it is through other tools, to make sure that wages across the board become more equitable. And I think without that, we're going to continue having a problem.
You obviously have a great interest, for lack of a better word, ESG. Let's talk about the E first. This is extraordinarily important. It's interesting, again, not to talk, it's not about me, but for 15 years I've been doing this show, and over the last couple of years, one of the things that we've been really focused on is ESG, the importance of it, the role in the market, all those different things. Can you speak to that and sort of the E in ESG? So the E in ESG, which is the environment part, is a little, I don't want to say easier. Obviously, we're coming out of COP26. And I was very involved in a lot of the preps into that. We had a climate summit, and we're fortunate to get a number of people to come and take part in it. And the last 2 weeks, we've had speaking to a lot of people in Glasgow, and some of my colleagues have been there. The E has never been more important, right? Our planet is at risk. And I think that now is something that is not a technical subject. I think the first time I saw the IPCC report, like 20 some years ago, it was a technical report. Some people looked at it, they doubted it, and they used to make fun of it almost. Now it is a common word, right? Every student has heard of the IPCC report. Everyone is following the 1.5, sort of temperature that everyone is concerned about, and making sure that we move towards cooling rather than heating the planet we live on. So the environment part, and now suddenly, and I don't know, Guy, in terms of your own work, you're finding suddenly is now mainstream, right? Both in terms of opportunities, it probably is the biggest set of opportunities to invest in as we speak. And it used to be, again, that when you said environment, investing in the environment or investing in climate-related, climate-smart things, people's eyes glazed over. Today, people are seeing those as the highest return opportunities, whether we're looking at EV, right? Crazy. Whether we're looking at other parts, not necessarily solar plants, but the parts that go into wind turbines, the parts that go into servicing solar plants. I mean, try to just get, solar moved into your house. You'll see how expensive it is today. So those areas are really growing super fast. But that's the positive. The negative is there's a lot that we need to do, and that's where young people come in. It's interesting, our business, your business specifically, it's very difficult. Obviously, you can speak to that. The market is extraordinarily humbling. And now you're adding one more element. You spoke to it in terms of, the returns you can get going down this road are actually outsized, but it makes a very difficult job more so when you're talking about allocation. So when you sit down and have these conversations, how does that factor in? I'm just curious, take us inside that room. So we are very fortunate because we're allocating across different, private and public markets and very early stage companies. We're investing directly in some early stage companies, that are, let's say, involved in directly improving things to do with the climate. We're also investing in early stage companies that are producing new drugs or taking existing drugs to make them better candidates for new age diseases, or getting education more equitably available to a lot of people who don't have access. So all of those things are,
what we're doing is measure the returns, and that is the easy part, right? Measuring the financial return is the straightforward part. And then you start trying to, if there is a price for something, like we don't have carbon pricing, right? So we then make an implicit price for things like carbon, because we know those things, whether there is carbon pricing or not, we know those are risks to your investments, right? A lot of insurance companies are already including it. And so you use those as part of your investment decision-making. And then there are the more implicit types of things, if you're working on education or health, very specifically, how many more kids are getting what kind of education or what kind of access. We do a lot in telecoms, but looking at some of the investments in that last mile to bring the internet to rural areas. It's very interesting as part of the new infrastructure bill, but we've been doing that for years. Highest return on capital. So I think the interesting thing is when you look at these, and I think as our students at Georgetown are looking at this, this is the area, if I was starting my career, that I would just concentrate on, because these are the biggest opportunities of a lifetime.
I want to ask a question from I believe it's a student, so forgive me if it's not. And this is directed right at you. Your success in retooling the private markets to do good inspire. Could you offer some advice to students who heard the call to work in public service, but are slowly coming to understand that private sector and finance may be the next frontier?
I think, the private sector can be and is becoming much more the frontier. But at the end of the day, what is good is that partnership between private and public. You need the policies to be right. You need the public sector to make certain things available, and you need the private sector to move fast, because public sector does not necessarily always move fast, as we've seen. So you need the two to come together. That's what I've learned sort of in my different parts of my career, whether it was at school or at Carlisle or at the World Bank or at Rock Creek. And I think it's that intersection. So you want to learn about public sector if you can get an opportunity to work there, but you also have to work in the private sector, because you can move fast and actually put to practice what you've learned.
I'm sure there's some people saying that you're 26 minutes into this and you haven't asked Afsaneh about digital assets. So here you go, digital assets, because that's captured the country, the world by storm.
So I am actually optimistic that digital assets can be used, in the right way for people who do not have access. Right now, a lot of people in the US are unbanked. In emerging markets, there's a lot of new payment systems that are going up. There are a lot of structures that were built over time for poor who did not have access to banking to have access to finance. Those actually don't exist in the US. Either you're banked or you're unbanked. And so having digital assets help you with unbanked population, which is the same population that you were talking about, I think is very positive. At the Bretton Woods Committee, we just had a recent session on this, and there's a big working group that Bill Dudley and I are working on right now. And basically, what we're finding is you need very good regulation in order for digital currencies to do better, and to make sure that the regulation is coordinated, because as we speak, there's so many different regulators and there's lack of clarity. So having clear regulation, number one. Obviously, with digital currencies, we hear a lot about problems with AML, bad actors taking advantage of them. Bad actors can take advantage of anything, right? So the question is, how do we set up a structure and a framework, see if we can help those consumers who are not banked take advantage of that to make a leap. So it has a lot of positive potential if we are careful and we create a good framework for
there's so many of your qualities that resonate. I mean, for me, your humility is just, it's remarkable given your achievements. And I know this, you'll discount it, but you're absolutely a role model for so many of the people that are watching right now, and for so many of the people that know who you are and know what you've accomplished. Speak to that. How did you get to where you are? Speak to the women, the minorities, the disenfranchised that might be watching, that are looking for that bit of advice that might help them get it to the next level, or just might inspire them?
By the way, Guy, I've never ran an Ironman. Unfortunately, I don't think I will. So
There's time. There's time.
So as my kids tell me, you know, life has to be much more balanced. So one of the things that I recommend you don't do is what I you know, my family has been and will always be very important. But I think especially for women in my generation, you really had to work overtime to establish yourself. I think the good news is that you don't have to do that as much today. I think being different is an asset, and having different views is an asset, and being able to be brave and voice your concerns or thoughts in a very constructive, positive way. I think life is really shorter than we realize, and we are on this planet for, you know, whatever these days, maybe for the younger people 120 years, but hopefully in excess of 100 years, but life expectancy is closer to 80 right now. And I think, you know, during that time, you really want to, again, make, you know, leave whatever you were given in a better place, whether it is, you know, through work, whether it is through your nonprofits, whether it is to whatever. And I was fortunate, I grew up in a family that really believed in education, and my parents did not have much money, but my father worked in education, and he basically took his 3 daughters and said, we're going to spend all our money on your education. We happen to live in a country that had a revolution. I could not, you know, I had to leave university to go to work. And you know, that was probably a good thing, that you knew that you had to make your own living. You earlier than you expected. You had to be on your own earlier than expected. Not necessarily life experiences that we all love to choose. But what I find, and I'm sure everyone is finding that, especially because there's nobody in the world who has not been affected by COVID one way or another negatively, right? Or their family has not. And I think you can take adversity and be very negative about it, or you can take adversity and, to the extent possible, turn that into something positive and learn from that and see what you can do better. And I think, Guy, you mentioned this in the very beginning. You said COVID has affected a lot of people, but a lot of people who were, you know, lower income have also done better, not because of government help, but because they have moved into areas that they never thought they would go into. And I think if we take those lessons for each of us and apply them, it is, you know, how do we turn COVID, which was a very negative thing, into a new health system that will give us all health passports, that card that has all our information. So we have that information. We can have higher wages that are commensurate with our value in society, not just, you know, because we work in asset management or in finance. And how do we really, you know, leave whatever we were given in a better place?
I've long been a fan of your work. I mean that sincerely. And you are, I mean, it's just, your energy radiates, and it's really, Georgetown is fortunate to have you in the community. I'm humbled to be able to do this. I want to thank you for your time. I want to be respectful of your time. Thank you for joining us so much.
Honored to be with you. Thank you.